Welcome back to Barry Charles, your one-stop shop for everything finance. And we're going to look at AMD. Yes, the company that keeps on delivering us money, but is it producing the results? AMD, Advanced Micro Devices. Let's get to it right here, right now at Barry Charles. Welcome back to the channel, guys and gals. We're getting ready to go semiconducting as we look at AMD, one of the most popular stocks on the stock market. But is this stock an actual buy? Do you need to reconsider your situation? Is this company going to be a growth factor for years to come? Or is it overhyped? Well, we're here to give you my analysis of AMD. We're going to do a good deep dive into the financials, look at revenue, net profit, earnings per share, shares outstanding, return on invested capital, total assets and total liabilities, dividends, if they have dividends, short interest, and so much more. And then we're going to give you the intrinsic value. If you stay right to the end of the video, we're going to give you predicted intrinsic value of the company, of where you can possibly look at a buying position in this company. Not financial advice. Everything you do in terms of investing is up to you. Invest at your own risk. But yes, let's get to it. A stock analysis on AMD. Well, yes. Anyway, to start off with, folks, if you don't understand what AMD is, just to simplify it, it's a semiconductor company known for its design and developing computer process and graphic designs, techniques as well. Also has artificial intelligence chips, where most of the hype is at the moment. And if we look at a little bit of what's been happening at the moment with this company, year to date 135%. Boom, it's been flying to start the season. Is it worth the hype, or is it time to get off the gravy train? Some of the big people involved in this company are Microsoft, AWS, Alibaba, Dell, all use their chips, as well as Sony for all its PlayStations, which was the big one for about $3.7 billion in 2021. So it's telling you that Sony is a big, got a big tie into this company. So it's got some of the biggest companies in the world, with Microsoft and AWS involved with Amazon, so, and Alibaba in China. So a lot going on for AMD is positives for the company. But do the financials match up? Let's go with it. First of all, let's have a look at the revenue. Well, revenue, not what I was expecting, to be honest. 23 billion in 2022, and it dropped in 2023 to around 22 billion. As the share, as we pretty much are going right into the quarterly decision making, so prices could go up and down quickly, but we're going to just do the analysis on what we have right here, right now. Net profit was, this is interesting, it was up 1.3 billion, and now it's 208 million. So some itchy heads there that it's going down. The net profit should be going up. Earnings per share 2.65. Yeah, so very low earnings per share. PE ratio 66, so you could argue this is a rich company. 52 week range from $72 to 185, where it's currently at 170, so it's up near its all-time highs. Well, I don't know about all-time highs, but you know what I mean. Well, the last year. Dividend yield, and there's no dividends with this company, so you don't have to worry about that, which I know all your shareholders at home would already know. Short interest of, interesting, only 2.8%. I thought this might be a little bit higher, but obviously at a $286 billion company, they don't think this company is going anywhere. Total assets has been pretty much the same over the last year, so not much to write home about there, around 67 billion. And what I was impressed about was the total liabilities only around the $12.8 billion mark. Wow, very impressive. Very impressive. In terms of total assets versus total liabilities, since doing this channel, this is one of the best companies in terms of that. It's absolutely off the chain. So that's very exciting. And also the long-term debt has dropped from 2.4 billion to 1.7 billion. It's very positive there, but one of the big ones, Free cash flow from 3 billion down to 879 million. So what is happening? The revenue is dropping, cash flow is dropping. What is happening? Are they investing somewhere else? That's where you need to do your research. Shares outstanding, $1.61 billion. Yes. And it has been reducing lately. So, yeah, so that's a positive. There's a positive for you out there. And the return on investment capital was pretty pitiful at 3.8%. So they're not really making much on everything invested at the moment. So worrying signs there. So how do we summarize this company? This is actually a company that's worth having a go at. Well, net profit going down, revenue going down, free cash flow going down, at least the long-term debt's going down, so they paid a bit off that. But yeah, so some concerns there, folks, if you're an AMD investor or looking to invest into AMD. But anyway, let's have a look at the intrinsic value. Yes. Well, before we get to this, let's look at the bear and bull cases, a little bit of advanced micro devices. So if you're looking at the positives, they're in with Dell, they're in with Microsoft, they're in with Alibaba, they're in with them all. Absolutely brilliant. But the only question mark is that can they be knocked off by NVIDIA? Can NVIDIA just go, boom, see you later, we'll drop the price of our chips way cheaper than advanced micro devices, and see you later, we are number one. That is a possibility, and you've got to think about that before you invest into this company, because NVIDIA is looking well ahead of the market, ahead of everybody else. So that's just something you have to think about. They got more money, so that is going to be the question mark for AMD, if they can handle that pressure and continue to keep Sony on side. So that's the question mark that you have to look at, is on the other side. But so that's a positive and also be a case in the same time. But yeah, AMD needs to go back revenue. They need to get more profitable, obviously. Go back up again. So that's what they need to do to improve. But yes, this is what you all came here for, folks. The intrinsic value of AMD. What is the intrinsic value? Well, I'm telling you right now. If we're looking at current share price around $170, with the current earnings per share of 2.65, with just a mega growth rate of 5%, you think it's 5% for the end of the time, you're looking at $51, folks. Yes, $51 and the stock's 170. Well, that's just long-term, you think long-term. 170, 2.65 with a 10% growth rate, you're looking at 78.7, so still 100 over where it is currently. So my mind boggles a little bit when you're looking to invest into the stock, but you obviously got to look at this side of the things. If you think that earnings per share is going to jump to 4 with the same growth rate of 10%, then you go into 118. Still not where they are, but it's starting to hit in the right place. And where it gets to sort of where you could start to justify the sort of prices, and this is maybe where the company where people are looking at right now. If you look at this company's current share price around 170, we're doubling the earnings per share they are at now at 5.3, looking at 50% growth rate, you're looking at $212. And just to let you know, as I'm saying every time on this channel, this calculation is through Trade Brains. It's just a basic calculation of the current share price with earnings per share, the current bond yield, and you choose your growth rate, and it gives you an intrinsic value. It's only a basic intrinsic value. You do not take this as face value. Do any research of your own stocks. Do it at your own risk, not financial advice. But yes, the intrinsic value. So 212, it starts getting to the interesting thing. Do I see the company doing that? Well, potentially long term, but do you want to pay that price right now? I don't think so. If I'm looking at valuations, everything I see here, I'm probably dreaming of it to ever go down to there. But to me, I need it at 50. Right now, if I wanted to feel safe, no problem in the stock, I'm not going to have any issues, I need it at $50. Now, people are going to say craziness may never go there, and that's true, because some stocks are always overvalued, some stocks are undervalued. That's the way the stock market is. Facebook is still undervalued, always is. It's always undervalued for all the time in terms of where it should be. So that's just a proven point here. And other stocks continue to be up and up and up, like a Costco, for instance, just continues to go up and up and up. So, yeah, that's the question mark for me on AMD. To me, if I'm being perfectly honest, I haven't got enough conviction to say, oh, I can see this company doing well. But if there's NVIDIA in the market, there's probably room for both. And there's also plenty more in the pipeline. Don't get it twisted, folks. There's plenty more in the pipeline when it comes to this. With the AI chips, and if the big players get involved more and more, like the Microsofts, the Googles, the Apples, then danger zone. They're not doing it at the moment, but I'm sure in the background they're looking at it, and if it happens, then monopoly, yes, and big problems for these companies down below. So it's just something to look out for, because the companies will see they're paying all this money. Can we make it cheaper? That's where the money goes eventually. But anyway, that is Barry Charles. Remember to like and subscribe to the channel. Share this video to all your friends, and I'll be back with plenty more finance 3 days a week. Have a great day out there.